Hello, this is Brant Spessart with Steward Wealth Strategies, and thank you for investing a few minutes with me as we talk about our mid-year economic update. As you can see, though, I'm in a golf shirt and not my normal dark blue blazer because it's hot outside. I hope you're enjoying the summer, but please be safe. Enjoy the heat, but be safe. It is hot here in Raleigh, North Carolina. Now, before we get started, please take a minute and complete the client review and risk assessment. That link that was embedded in the email that included this webinar, please fill that information out. Let us know your name, any email or phone number updates, your address. Have there been any changes there? But also, have you had any significant life changes that may impact your finances or your financial plan? Should we know about something happened to you financially? Absolutely. We're your financial planners. If you've changed jobs, if you've retired and received an inheritance, made any sort of changes, please let us know. We can update your records, we can update your financial plans, and it may be something that we need to assist you with, and we will reach out. Also, if you could, please continue filling that out and complete the risk tolerance questionnaire portion. This is just to help us get an idea of your objective, your time horizon, but most importantly, your comfort level for volatility, the ups and downs with the economy. We know all our clients are human. It's not finance, it's personal finance. And we know that who you talk to today, what radio station you're listening to, or what TV program you're watching, or just what you're clicking on your phone. There's a lot of information out there that's trying to get people's attention, and a lot of it has to do with finances. And sometimes a lot of it has to do with doom and gloom and invokes fear and concern. We want to make sure your investments are appropriate based on your objectives and your goals. I think we all want to make sure our plans are appropriate based on what we're trying to accomplish, but we also want to make sure it's personalized for your comfort level when it comes to volatility. We know all our clients are unique, and we want to make sure that we serve you the best that we can. So why do we host these webinars? Why do we send out newsletters electronically and sometimes in paper? Why do we host workshops? Because knowledge is power. And educate client is our best client. I think we all want to be good stewards of the resources we have. Well, we have to make decisions. Information helps us make wise decisions. Surround yourself in wise counsel. Again, an educated client is our best client. Let's make calculated, knowledge-based decisions when it comes to our finances for our family, our goals, objectives. Let's be good stewards of those resources that we've been entrusted with. So today I'm just going to talk briefly about the market and some ideas and strategies to consider moving forward. Now, here's what you have to remember. So many people think of investing as financial planning. Investing is part of financial planning, but it is not all of financial planning. Financial planning is making decisions that are appropriate to protect you. Think about the what ifs. When we retire, we have questions about when should I start Social Security? What about Medicare? How can I plan for healthcare if I'm retiring young and early? Will I have enough? What buckets do I pull from? Tax planning. Taxes are one of the biggest drags on investment performance over the long term. And most of us watching this webinar probably don't want to pay more taxes than we need to. I appreciate the fact that I have to pay taxes, and I appreciate a lot of the services that come from them, but I don't want to overpay if it's not necessary. Estate planning is one of the areas of financial planning that will affect every one of us. Be prepared. Make it easier on your loved ones by having a properly planned estate. But then, yes, investment planning, those are the tools to help drive our financial resources, accomplish a lot of these goals. But then lastly, generosity. We are truly blessed so that we can be a blessing. Let's enjoy the financial resources. Let's help our children, our grandchildren, make an impact to our community, make a kingdom impact. We are blessed to be a blessing. So let's have a financial plan that can help us, help our family, but also help others at the same time. Now, investors over the past year and a half have done fantastic. If you look at January of 2023 through June of 2024, the markets have had great upward movement. we've hit highs. But as you can tell when you see this, we've also had a lot of volatility. And if we just look at 2024 alone, I mean, 2024 has been a fantastic year so far as of this recording, but there has been a lot of volatility. But investors that have hung on, stayed the course, have done quite well. And in fact, what was really neat about this year is the Dow reached an all-time high. The Dow actually crossed 40,000, which was really exciting. So when we think about the economy and we think about the market right now, I mean, you know, there are conversations that, hey, look, we've got a strong economy. Interest rates haven't done a whole lot of moving so far this year. We're still dealing with inflation, but companies are showing good earnings right now. So what about interest rates? You know, the Fed controls interest rates. And for the longest time period, as we were getting out of that 07 to 09 recession, the Fed lowered interest rates down to almost zero to nothing levels. But then all of a sudden, when we went through the pandemic, and then shortly after, when inflation started to take off, you know, the Fed raised rates at a drastic level. They raised rates at one of the greatest increases that we've seen in decades. We went from almost zero interest rates to the mid fives, and that slowed the economy down quite a bit. Right now, if you look at this chart, I mean, this shows you that, hey, look, you know, it feels really high right now, but here's one thing to keep in perspective. If you look over the past 50 years, are rates unreasonable? You know, if I think about over the past 10 years, yeah, they're really high. But if we go back long term, interest rates are actually not that bad. So the pattern for the Fed when they've met here recently is basically to hold steady. We had a rate increase back in July of last year, but since then the Fed has met and basically just kept interest rates the same. Now, earlier this year when we were presenting, you know, the Fed was saying, hey, look, we'll probably make 3 rate increases between now and the end of the year. We haven't seen that. And most recently, the conversation sounds like there may not be any rate increases, maybe one, but I don't think we're going to see a whole lot of movement as far as, I'm sorry, I said rate increases, rate cuts. Earlier this year, they were talking about 3 rate cuts between now and the end of the year. Hasn't happened. Really, it's been a hold steady pattern, and the Fed's basically saying now there may be a chance for 1 rate cut between now and the end of the year. Inflation's still a concern, but here's the thing. If you go grocery shopping, if you put fuel in your car, if you make big purchases, you're feeling inflation. Now, the good news, inflation is not as bad as it once was. Inflation was just a couple of years ago about 9%. Right now, inflation is about 3.3 to 3.4%. That number right there, though, even though it's significantly less, does not mean the cost of goods and services have necessarily dropped. Lower inflation just means that the cost of goods and services are not going up at the same rapid rate that they once were. $100 does not buy much of the grocery store anymore. And that's not going to change if inflation stays the same. We have to make sure that we're prepared for higher expenses when it comes to our budgeting going forward. Now, one thing I would keep in mind when it comes to interest rates. Now, here at Steward Wealth Strategies, I know a lot of you are Dave Ramsey fans. We're huge Dave Ramsey fans on our end. When we talk about interest rates, a lot of times we think about, oh, savings rates, maybe mortgages if somebody's borrowing for a house, but we rarely talk about credit cards, and these numbers are alarming. If you look at the average credit card rate out there, when you take in consideration some of the specialty cards that are for travel, business, the overall average credit card rate is about 28%. That's huge. If you go back a year ago, the average rate according to Wallet Hub was around 21%. So if you have credit card with a balance, pay attention. Call us if you need to pay it off. I know most of our clients are debt adverse and are not carrying credit card debt on a month by month basis. If you know somebody is, check in on them. Have a conversation, share this information because these rates are absolutely ridiculous. Now, with higher interest rates come better options for conservative savers. And this is just a look at where we stand in terms of treasury yields today versus treasury yields at the beginning of the year. Treasuries are paying a little bit higher interest than what they were at the beginning of the year. So for a conservative investor that's looking at savings, CDs, treasuries, you should be receiving decent interest rates right now. If not, talk to your bank, reach out to us. We can have a conversation, maybe try to steer you in the right direction, or maybe even help you with it as well. But just know for savers in this environment, it's a lot better than what it was just a couple of years ago. Now, if we think about the market and volatility, this chart right here goes back to 1980. Look at how investors have done over the past 40 years. They've done fantastic. What about the past 30 years? What about the past 20? What about the past 10 years? Long-term investors have fared very well if they've focused on a long-term plan, stayed diversified, and ridden out the ups and downs. Even over those long-term time periods where there's been tremendous growth, though, you can see there are time periods where we've gone through a lot of volatility. And if I'm getting in and getting out at the wrong time, that can be very costly. There's always negative headlines out there, and there's certain words that will try to get people's attention, and recession is one of them. Just so you know, a recession is when the entire economy constricts or contrasts for several months. And right now, there's not really a lot of talk about a major recession around the corner. However, a market correction could very well be expected to happen. A market correction is when there's a drop in the market of about 10% or more. Market corrections are part of a normal investment cycle. If you think about the charts that we've looked at so far, there is volatility when you're an investor. There's been quite a few time periods where we've seen the markets drop about 10% or more. But for investors that have hung on and stayed vigilant and focused on their goals, you've been rewarded well. But regardless, let us know if we can help. Have a plan to deal with a recession. Have a plan to deal with a market correction because knowledge is power. One of the best ways to deal with volatility or tough times in the economy is to have liquidity. Liquidity is money in the bank or conservative cash that you can get your hands on pretty easily. Make sure you've got a fully funded emergency fund. We generally recommend a fully funded emergency fund no less than 3 to 6 months of your monthly expenses or your obligations. Make sure you've got cash reserve. If you can pay your bills during a tough economic downturn, that gives you power. But also, don't take on new debt. Try to eliminate debt. Again, as a lot of us are Dave Ramsey fans of taking financial peace, we know getting out of debt is critical. Your greatest wealth building tool that you have is your ability to earn an income, but incomes get robbed by all these payments out there, including car payments and credit card debt. But also think about any sort of expenses that may pop up, or maybe not pop up, but that will happen over the next few months or couple years. Any big purchases, anticipate those, be prepared, and decide, hey, should the funds for those expenses be in something conservative, safe, and liquid? Talk to us if you want to discuss what might be in your best interest as far as your financial plan to help protect as well as plan. Now, headlines will probably be very alarming over the next few months. There's a lot of geopolitical unrest in the world. There always has been, but it's easier to hear about it nowadays. And there's a lot of things that have been getting our attention. A lot of the headlines over the past couple of years are still headlines today, and they're concerning. But here on our own home soil, what's going on this year? A U.S. election. Markets don't always react well to uncertainty. And there's going to be a lot of uncertainty after we enter election season. So stay vigilant. Know that there's going to probably be a lot of volatility during this time frame. Now, volatility doesn't necessarily mean the markets are going to end down or the market's going to end up. It just means there's going to be some movements up and down along the way. Investing is a long-term commitment. I think commitment is the key word there. Because if we're getting in and out, that's probably more short-term and that's probably more gambling. Staying diligent and sticking with your game plan that's focused on your long-term objectives, your goals for your family, your financial future. Be a long-term investor. Know that there's going to be ups and downs along the way, but what do we say? Proceed with caution. If you're on a road trip and your GPS says, hey, you've got 40 miles on the current path, you don't have to make any left turns or right turns, that's fine. But that doesn't mean we need to take our hands off the wheel and close our eyes. Absolutely not. We still need to proceed with caution. We need to be prepared in case something does change or warrant a change with our strategy or our plan. Reach out to us. We are here to have these conversations with you. Don't feel like you have to wait to a full review meeting. We can have a quick call, quick Zoom with you to discuss any sort of concerns that you may have. So to wrap up, remember, inflation is still a concern. It's a whole lot better than it was. We're still not quite at the Fed's target rate for inflation. Interest rate cuts are on hold right now. So we may see a rate cut between now and the end of the year. We're not sure, but the Fed has basically held rates to where they've been for about the past year now. There could be a market correction between now and the end of the year. We don't know for sure, but there will definitely be volatility. Volatility has always existed for investors. But what do? Stay the course, focus on the long term, and know that we're here for you. Our role is to help you so that you can focus on what you enjoy, what matters most to you. Let us focus on the investments. Let us have conversations with you about the strategies, but focus on what matters most. I hope this information was helpful today. Maybe I shared some information with you that you weren't familiar with. For some of you, I may have just repeated something that you've heard already or many times from us. There's nothing wrong with repeating good news. There's nothing wrong with hearing something that's truthful and right multiple times. Charlie Munger, Warren Buffett's former partner, said, if you go to bed smarter than when you woke up. I think if we can all learn something every day, that makes us a better person and it helps us make better decisions, because how did we start off? Knowledge is power. So thank you very much for the opportunity to serve you. It is an absolute honor. We here at Steward Wealth, we love what we do because we've got the most amazing clients in the world. So thank you. If you're not a client of Steward Wealth, please reach out to us. Let us know if we can help you or have a conversation with you. But if you are a client, thank you so much for blessing us with the opportunity to take care of you. Enjoy your summer. Have fun. Try to stay cool if possible. But God bless you.